Hello, and welcome to the Performance Leadership Learning Lab's Virtual Roundtable on AI-powered exit readiness. We're glad you're here. Before we get started, we've got a couple of housekeeping items. One, a replay of today's session will be emailed to all our registrants. And then two, if you have questions for the panelists, please feel free to throw them in the chat. We'll address those at the end of our discussion with those questions for the audience. So let's kick off with introductions. I'm Will Gladhart, the Chief Marketing Officer at the Culture Think Tank and the PL3, and I'll be your moderator today. So I would like to ask each of our panelists to share a brief overview of their role and background. Lindsay, we'll start with you, then Bob, Will, and we'll wrap up with Mara.
So, hi, thanks for coordinating this, Will. I'm Lindsay Guzowski, CEO and founder at the Crucible, which is an executive assessment company that was predicated on understanding leaders in investor-backed businesses. Oh, and
Excellent.
to give a little background, I worked for a number of years in executive search for private equity, briefly on the deal side in private equity, and about 5 years ago founded the Crucible. So I'm excited to be a part of the PL3 community and helping to inform businesses as to their leadership, their culture, and where things stand valuation-wise.
Thanks, Lindsay. Thanks, Will. Thanks, everyone, for joining us. I'm Bob Dunn, Managing Director of GF Data, which is owned by the Association for Corporate Growth. What is GF Data? We view ourselves as the most accurate source of valuation, leverage, and deal term information, charting private equity-backed investments in the middle market. We have a cadre of about over 300 private equity firms that contribute more than 33 deal data points to us on a quarterly basis. We take that information, aggregate it, anonymize it, and provide benchmarks based on averages, medians, top quartiles to provide guidance for what companies are selling for in the middle market.
And my name is Will Lindstrom, and I am one of the co-founders and the CEO of the Culture Think Tank. And what we do at the Culture Think Tank is really focus on trying to understand how leaders impact business and to translate qualitative metrics into quantitative metrics that allows us to predict future success, understand what to do right now or in the next period to drive performance, and then ultimately connect it to valuation and exit premiums. So that's what we really focus on. And I'm excited to be a part of the PL3 as well and look forward to the day.
Not last but not least.
Well, I'm Mara Larson-Richard. I'm the head of the venture capital team in the global private equity and venture capital practice at Salesforce. So we are very excited about the world of AI and agents. I was just telling everyone I'm fresh off of the Salesforce Startup Summit yesterday, which was all about our agentic future. My background is in startups. I was a founder. I worked for a number of AI companies over the past 10 years, and then I was an investor before joining Salesforce to start the VC practice and help startups build and scale faster in this agentic future.
Very cool. Well, thanks for the introductions, everyone. Really appreciate it. Let's hop into our first question. This one's a little bit of a two-parter, but can you share a story where data insights or the lack of insights directly impacted deal valuation or buyer interests? How do AI tools like Agentforce, et cetera, benefit in the build-up to a sale? Who wants to kick that one off?
Well, I can kick that off. So, I think it's been a core part of actually building the VC practice over the past 6 to 9 months. Like we've really seen this like huge shift in like what data is really required to fundraise, even at like the earliest stages. And so, data has always been important. Due diligence has always been extensive as you get later and later and later. And certainly when you're in private equity or you're at the point of an IPO, you're looking at a whole different world of data required for that due diligence. But, for quite a long time, like we made early stage investments with like with no data or with tiny amounts of data. And I think over the past year or so, we've really seen as the venture market has had its own contraction and things have shifted. The importance of founders being able to not just show like generic data, but actually really being able to show, you know, detailed metrics around their pipelines, their conversion rates, what that means in terms of how it's proving their hypotheses in the market and how it's like demonstrating product market fit. And I think particularly in the world of AI native companies, where you now have companies going from 0 to 100 million in, 1, 2, 3 years. We had 11 labs, who we work quite closely with at our startup summit yesterday, talking about going to $100 million in under 3 years. And all the fundraising that goes along with it. And I think like the actual, I don't want to say it's the burden of data. I actually think it's the opportunity of data, like, is part of what is like enabling companies to do this as fast as they are doing it, because you're really like getting your reps in much more quickly than you used to be able to get them in. And that accelerated learning, which velocity is like one of the key like determinants of how successful your startup is going to be, is just able to compound like, much more extensively. So I know that's not like a specific story. I'll see if I can think of a specific story that I'm allowed to share. But that's definitely what I'm seeing in the venture market. And I think that's part of the opportunity Agentforce brings.
Well, and one of the things that Mara was highlighting there was a lot of the different metrics that are important to bring to the table when you're trying to get investment, when you're trying to sell to the next round. One of the things that people have historically left out of the data-rich environment are truly metrics on people. And so when you look at a lot of these sims, they'll have an overview of the management team, and everyone's graded a B. Or you'll have, a one paragraph discussion about, the quality of the workforce, or, more often the size of the workforce and what you're going to have to do from there to achieve the growth that you need. But there's not a lot around, is the business well structured from a leadership standpoint, from a culture standpoint, to achieve that investment thesis and to put them into the position where they can learn quickly from, new information and take all of this data that exists in their world, and particularly in, this agentic future where we're going to have so much it's not just physical employees, but virtual employees, and understanding the interplay there, how all of that comes together, and how to put those into tangible numbers that can be utilized by investors, by buyers, and by sellers to highlight the value of these businesses.
And I can touch on that as well and actually share a story. So Salesforce, which is in the background, is one of the solutions that we've all been collaborating on. And it's all about how do you provide those performance metrics to identify how leaders are engaged, how well the company is engaged, how well the people are engaged, and ultimately what it does to exit. So one story that I can't share the name of the company, but it was a smaller exit. They were looking to sell, but it was heavily engineering based. So there was a big concern that the founder who was leaving, the people that were the engineers would leave. So how do you demonstrate how strongly connected the workforce is to the company versus the leader that's exiting? How well is the next rung of leadership able to do that? And ultimately, there was a big concern that they were going to leave, but through performance metrics and by being able to demonstrate, and this is all AI driven, the connectivity and the strength of the connection and demonstrate how it was working over time and monitored over time actually led to an 18% premium on the exit. So the early evaluation was, a certain number, but then they were able to not only demonstrate the strength of the workforce, but they were also able to, Lindsay's point, match the buyer. So what is the makeup of the buyer? What do the traits of the buyer look like? So what's the acquirer? It was a strategic buyer, but what does it look like? And then how well of a match? So it's a little bit of dating, but it was a really good match, and that actually led to an 18% increase in premium. So I think that's where I see a lot of this going, is in the pre-due diligence and the due diligence process, to be able to demonstrate the strength of the workforce and also demonstrate that these are in smaller companies, family-owned companies looking to exit, that when someone leaves, you're not going to lose the whole workforce, and you're going to get acceleration into the transition.
Yeah, and I just echo what Mara, Lindsay, and Will were saying. I think the two big things on it, velocity, definitely, right? Return on investment is directly tied to the amount of time the investment is held. And private equity wants to be as plug and play as possible, right? So the better you know your company, the more information you can provide in a consistent fashion, the better position you're going to be in the sale of that company, and the more efficient the process will be, and the higher valuation you'll get. One example I would put out there, we recently started asking about whether a sell side quality of earnings was done on a transaction. We only have 2 quarters of data, but we actually found that those companies that do a sell side quality of earnings end up with about a half a turn more of EBITDA and the final valuation of the company. And I think that comes back to knowing your business. In terms of the anecdotes on it, I think we all know those anecdotes where a big customer dropped and the sales aren't going to look like they were forward. But I mean, that shouldn't be something coming up in diligence. That's something the seller should know about ahead of time, should be able to address. And that goes over to questions about management team, ranking of management team, how good is the management and the employees coming into the business. And I think those are metrics that private equity is more and more getting into. It's gone beyond simple financial metrics. And it's getting more to how healthy is this business, because that health goes directly to how quickly they can scale it.
I think those are all great points. I think this really leads into our next question. From your perspective, what are the most common blind spots owners have heading into a sale, and how can real-time analytic insights actually close those gaps? I think, Lindsay, you might be a great kickoff for this one.
Yeah, I mean, I mentioned it before that I think that people are not honest with themselves as sellers or concerned enough as buyers about the status of what is happening within these businesses. Do the workforces believe in the future that's being put forward? Are the leaders going to stay? Are they the right leaders to stay? Is there a bench behind them? From my own experience, when we sold our family business, none of the top family members wanted to stay with the business. And we knew that we had quality behind it, but we couldn't prove it. And so there wasn't any real-time information that could show that, 2 of us had already stepped out of the business basically, and it was being run by other people. And here's how the workforce believed in the vision that those people were putting forward. And that's why this is going to continue to grow at the rates that it was. Whereas in a very similar business, where people might be stepping out because they know they're leaving, a dumpster fire behind that no one else is going to discover for another 9 months. And so I think that there's a lot of work that is put into, on the seller side, dressing up these companies to ensure that they look as pretty as possible. And on the buyer side, trying to ensure that they're the ones who get to win the deal, as opposed to really understanding, is this the best fit? And having that information early and often can be incredibly useful. Also, to Bob's point that he was making before, if you know these things going in, it actually doesn't matter how bad something is if you can plan for it and you can factor that in to what you're intending to do with the business. So knowing that there's a substantial gap in a certain area with regard to, employee effectiveness, or, that there's a disconnect in communication, or that there's, a skill set gap somewhere, that's addressable. That's all easy to fix if you know about it, but only if you know about it.
I would add to Lindsay, I think being able to get that real-time tracking or near real-time tracking of sentiment going into diligence on the actual sale on it, right? Because word gets out, whether or not you want word to get out, your employees know. Do they view this as an opportunity with the sale of the business going on to a larger organization where they'll potentially have more room for growth, et cetera? Or do they view it as, oh, we're getting gobbled up and we're going to get forced out on it? And I think all those things are manageable if you have the information coming back to you and you can get it in a reasonable time frame, which I think is kind of at the crux of what we're talking about. What reasonable time frame with what AI can do now? It's been, brought down by a factor of 10, right? There's a lot you can do a lot more quickly, provided that the information is being tracked and is available.
Yeah, and I can touch on that as well, because what we're seeing is in the particularly with wealth managers, to Lindsay's point about companies that are looking to exit, I think one of the biggest blind spots, and it's not a blind spot, it was the time and energy and effort it took to gather all the KPIs and all the critical metrics, from sales to marketing to some of the softer qualitative ones in terms of leadership, was so time consuming and so cumbersome to write the report that it was like a one-time thing that they would do, and then it's not maintained, so you're not, to Bob's point, getting the trending line. But where I think the most exciting thing, especially in the exit planning type of area, is to be able to take all the data in real time, take in some of the benchmark data, so you know what the critical layers are, and then to be able to let AI run out not only the analysis, but it also gives you the what to do. So if you get here, this is what this looks like. If you get here, this is what this looks like. And that was sometimes a 1 month, 2 month type of activity. Now it can be done in near real time. So as a result, you can do it every month. And so now your exit planning becomes a part of your financial planning, and you know exactly where you need to go, and you know how the leadership should be aligned, so that you get a nice, clean, transparent package that goes into the due diligence process, which is just going to make it easier, faster, and more successful in transition.
I think that's a great place for me to dive in, because I think that move from like reactive dashboarding to real-time reporting is something that is really critical when we think about like the differences of what AI is bringing to us. And then when you add agents on top of it, right, like agents can take actions on like that real-time reporting that's happening. Because I think something, when we ask a question about like exit planning and exit readiness, like, you know, I think you really have to think about like alignment for like, what does an exit mean? Because the difference between like a you know, really successful family business selling to private equity versus like, you know, a distressed business selling into private equity versus like, and also what stage and what growth and what kind of private equity company. And like, there's so many different elements. And when you go into the world of venture, right? Like, you know, when I talk to growth equity founders, and when I worked more, when I was in a growth equity company, like we started to think about like our Series D, like relative to what it would be like to IP. Like this is our like rehearsal for what a potential IPO would be like. And you kind of are moving towards it like stage by stage. And so those are their own kind of like exit dress rehearsals. So I think really being aligned to like, what is the exit that your company or that your investment is really tracking towards? And then how do you set up all of the real-time tracking and all of the agents and all of the metrics that realistically are going to matter in that exit, in that sale? You know, and even though AI is making this like a million times easier, I think there really still is like a big element of change management work to happen around the technology that needs to be built, because you really need to think about like in your specific, you know, experience, like what exit are you going for? What is going to matter in that? So how are you going to align like all of the systems? What systems do you already have that are going to need to feed into this? And then based on the culture and the leaders that you have, like how are you going to set up agents that might take some of that automatic action for you? Because maybe you want to send nudges through Slack around certain things, or maybe that wouldn't be part of your culture. And so the right way to do this is to have like the agent like pull the data and pull a report of actions that is then reviewed by the management team, and the management team chooses to take those actions. But that's something that as of right now, agents and AI probably shouldn't be like in control of all of that. But like you really have to, as leaders, like think about that alignment, and then how like the people, process, and technology element stack up against that.
Yes.
I think that's a great, you know, every successful sale comes along with a really good story, right? So what story are you telling the buyers out there? And is that story going to be effective for the buyers that you're working with? You know, so knowing the details, not only about your own business, but then also what's the market you're going into? Who are you talking to? Are you talking to a private equity group, a corporate, an independent sponsor? They each have different, a family office, they each have different, or venture capital side, different requirements, different needs, different KPIs. But again, the better story you can tell, the more information you can put in there and show that you're taking these actions. That's what I think really sets aside those premium valuations versus everyone else in the herd on it.
Absolutely. And I also think, go ahead.
Oh, go ahead.
I was just gonna say, like, I think particularly in a world that's moving as fast as where we see the world moving right now, like I think consistency and longevity like have a premium to them, right?
Yep.
And so if you're able to say, like, you know, if you have like certain metrics that are going to matter a tremendous amount to your potential buyer, and you can say, like, this has been true over the past 2 years, 3 years, right? Rather than, and that's only going to be something that you can build into that narrative if you've probably been tracking it and managing it relative to you coming up with those metrics retroactively and then being like, oh, like a whole bunch of these like are not ones that are going to fit in our story. And so we're going to have to pin it on metrics that are like much more short term, but that's not going to give the longevity to the valuation that is going to help you achieve that outcome that, you know, you might rightly deserve. You just can't tell the story to merit it.
Yeah, and what I was going to touch on is you brought up a point of change management. I was in PricewaterhouseCoopers Consulting for a long time, and the hardest part was writing all the reports and writing the reports for the different audiences. And I think what you guys are talking about is you might be selling to a strategic buyer. You might also be selling to, you know, someone that's going to integrate it into their existing operation, or you're going to sell it to a private equity. But now you can have, you know, by having those stories 2-3 years out, but now you don't have to write the report. The agents and the AI can write those reports for you. So they're doing the analysis for you. So you still need to review them, but now you have them lined up over time and you're marching to it over time. So you're able to basically do the change management, the process improvement, the analysis in real time versus, you know, tomorrow's point, we have to wait to the very, very end. Well, now you can start 2-3 years ahead of time, have the narrative, have the trends, be proactively driving performance, and then you know, that's to Bob's point, that's just going to lead to those premiums. But nobody wants to write those reports. I remember having to write them, but now that you can do that, you can just channel the strength of the artificial intelligence, generative AI to do that.
Yeah, I think you all are bringing up great points about not only the human element, but also having those long-term metrics for the narrative. And as Mara said, like, what do you want your journey to look like? Is it 2, 3, 4 years down the road, but also like what's your next raise going to be as the company grows? So, you know, putting those storylines in place, I think that leads really great into our next question of, do you see AI becoming a regular tool in the boardroom? And if so, how do you see leaders adjusting and leveraging AI to strengthen their roles in the organization or with board members?
I mean, I certainly see it being a place. Every operating partner call I hop on these days with various people is talking about how they're using AI tools and sharing best practices and which ones are working and which ones aren't, and how they can consolidate information across portfolio companies and understanding with those metrics, you know, the analysis behind it, I think is going to supplant some of the work that a lot of the, you know, more junior people were doing to pull all this information and plug it in together, when you can have agents that can do it for you and tools that are leveraging this to come up with some insights. People just still describe a lot of the AI outputs as information from an intern, because you still have to check it to make sure it's right and that it's not making silly, unwarranted mistakes. But it does a lot of the legwork for you. And so I think that boards are going to be taking more and more of this as table stakes, that businesses are utilizing information in a way that allows them to provide the deeper level of analytics and okay, so now what do we do with this information, rather than just presenting the information or having a story that they're looking to tell that leverages all this hard work we did. Well, now the AI can do a lot of that hard work for you, and they're going to be requiring that next level of insight analysis and planning to come out of it. The generative AI, to Will's point, can also help do some of that for you and with you, which then enables even more robust thinking, thought processes, discussion, and development of these companies in a faster and faster way.
I think it moves the focus for board discussions off the what and into the why, right?
Yeah.
Because you're going to get more regular updates. You're going to have this information that was too cumbersome to prepare on a regular basis, available on a regular basis. And I think that, you know, everyone knows what the forest looks like. They can now identify the trees that are a problem, right? Like that's to me what I see. It's a step up in the strategic oversight that the board can provide, because they're not having to wade through all this stuff that was, you know, episodically given and inconsistent oftentimes in how often it was provided.
Yeah, absolutely. I actually do have a story here. So Zach is a AI board deck technology that Salesforce Ventures has invested in. It's co-founded by Edward Norton and Robert Wolf, who's a serial entrepreneur. They're very passionate about board governance, and we love working with them. They're phenomenal. And I think that, you know, reimagining like how boards and management teams work together, how they share information, like, you know, they've launched an agent on top of those board decks, I think has been really interesting to see like how much faster they were able to move companies towards alignment ultimately, by having that clearer, more consistent information, you know, flowing through technology rather than like the traditional, you know, send a PDF, send a PowerPoint deck, like experience, send a bunch of Excel sheets and hope that everyone like downloads the packs and reads them, and they make their notes separately and they do everything kind of separately, which is a lot of like really duplicative work. So I think Zach is like a really great move towards this. And it's interesting because I think kind of related directly to this is DataSite is a M&A SaaS platform, and they recently launched Agentforce, and they've seen with their customers that it's boosted chat resolution from like 50 to around 75%. But, you know, when you think about like how, you know, in the exit experience, like how M&A, which I would guess a number of us have been through and a number of our audience have been through, like how not smooth the integration process often can be because of everyone having different levels of information, everyone kind of speaking different languages, having different terms. Like when you think about like adding an intelligence layer where people can go like easily have those conversations and get those answers like faster, like how much that's going to improve customer retention, how much it's going to improve like metrics in that integration that are going to change the valuation in that event. Like I think that's like very significant. So I think there are like, we're starting to see tools that can like really help boards and teams navigate these experiences.
Yeah, and I think also it plays well going down to the smaller companies, which is more of the family-owned companies looking to exit, which is kind of where we focus. But I think it helps the financial planners and the wealth managers to sit down and be able to access an agent and ask the question with their client in real time. So versus, I'll get back to you, let's look at the analysis. It's just, so what if I do this? Well, what happens if we grow sales by 12%? What's that going to impact my valuation or exit? To be able to ask that question and have that question in real time with your client allows the advisors to become back to the point of, I'm going to give you a bunch of data, into, okay, now we're having these strategic conversations. We're talking about next steps. We're starting to really talk about guidance, and you're just more active and engaged in that 3 to 5 year period where you're going to be, you know what you're doing, you know where you're going, and you have that insight to be much more actionable.
Excellent. So we've got a couple quick questions here as we kind of come to our last 15 minutes. A few of these you all have answered as you've discussed, but you know, this might be a question for Mara is, you know, what makes tools like AI and Agentforce different from your traditional analytic tools, and why is it really a game changer for leaders, investors, owners, and/or wealth managers?
That is an awesome question, but that's a super, super big question. So I will, you know, try to make it as actionable as possible. I mean, I think the really big shift, right, is that we are moving from dashboards where you have to do the like someone has to do the diagnosis on the dashboard ultimately, to diagnostic agents. And that really helps us in moving to that real-time experience, because for like technology has been able to pull in an infinite number of numbers for a number of years now, right? But it wasn't going to necessarily be very useful, because you would have these, then you would just be making a dashboard with like millions of numbers. And so I think the ability to have all of that data really come in, have a layer of analysis on top of it, have something that has enough intelligence in it that it can be making some of that diagnosis, and then it can be helping direct your attention. I think that is one of the really big opportunities for businesses much more generally. But, you know, I think specifically when we think about private companies, I think private companies have like a real advantage around this, because they can deploy all of these benchmarks and they can deploy a lot of this much faster than oftentimes like public corporates corporates can because of like the internal reporting procedures, right? And having less of a quarterly mindset. And so I think that can help improve kind of like the valuation narratives, and it can help improve like the operational performance overall. And so I think those are like, I think there is this huge mindset shift that is still like very tricky to navigate, because it is hard to really move from, but this still seems like a dashboard, or this still seems like a chat bot, or this still seems, and to really think about like, but how do you continue to like iteratively build the kind of system, and how do you iteratively build the multi-agent orchestration around your company to get that like real-time analysis and then that real-time help. You know, I think Chris Billmeyer, the EVP over Sales Cloud and growth products for Salesforce, was one of the speakers at our Salesforce Startup Summit yesterday. And he was saying, you know, in the next 12 to 18 months, like, we believe that, you know, we will have identified the whole sales process in some capacity. And really what we're moving towards is like actually selling sales teams rather than selling sales tools. Like, and I think that's really true. I think that, you know, he's talking about that from a sales perspective, given his area, but I think that is a really good framework for us to all think about, like, how are you not just thinking about this being tooling, or maybe you're thinking about this being tooling today, but you're thinking about this being like the team that you surround like every individual in your company with to make them the best performer possible. And so there become like, you know, the sales teams that are around every individual AE, or the service team that is around every individual service rep, or, you know, the finance team that is around every analyst that you have. So like you can think about this for every part of your company. But I do think that is like that's still like a huge mindset shift. But I think that those who are getting it right, and I think we see this with some of these like hyper growth companies, because you have, you know, Cursor growing to 300 million with under 50-ish employees. You have, you know, dozens now of AI native companies who are getting to multi-$100 million ARR run rates in under 3 years, and with like dozens of employees, not hundreds of employees, but they're in part doing that, right? Because they are building companies from the ground up that have a lot of support around every single individual hire, relative to hiring people in and then trying to layer tools on top of them. So I think it's just a very different way of thinking. And I think the more that we can start to understand where we each are in that journey, in that thinking, and then think about like, how do you help progress that? I think that's really the opportunity and the shift that's occurring. You can tell I could talk about this for a long time, so I don't want to like dominate this answer, but if there's additional questions, I can go into it in more detail.
Yeah. Do you all have any other thoughts on that? I saw some head nods.
I mean, I think Mara's right too. On the diagnostic side, being able to look at things like correlation, that'd be very challenging to look at from a dashboard perspective and see the consistency, cyclicality of sales, things that, again, might be looking over a long time frame, but you're going to get a, you know, very quick response on it, and focus on, you know, what the potential issue or opportunity is, which would have taken time, you know, in the old world, quite a bit of time probably, right, to actually go in and figure out, all right, is this a one-time blip? Is this something we consistently see? Does this happen when this happens? I think all of those things with AI become a lot more apparent. And again, more time to be able to focus on not diagnosing the issue, but trying to find the solution to it.
Okay, very cool. Mara, you mentioned that there was, you know, a client or a investment of yours that is using AI in customer service automation. You know, now in the discussion today, of course, was around, you know, the more complex pieces. You know, where do you really see that moving into, you know, into the performance diagnostic space, leadership alignment, exit planning, et cetera?
I mean, I think one of the most fascinating things is how different the agents. So Salesforce has about 4,000 customers that are now using agents. And So that's individual customers who are using agents. And then, some of those customers have hundreds of different agents that they're trying out, right? Across big corporates. And there's internal agents and there's external agents and there's, marketing segmentation agents and customer service and sales and SDRs and coaches and right. The list goes on and on and on, right? And there's a whole website of Agentforce stories out there to look at. But I think that, if I think about how this moves into the space for exit planning and, I think it really depends on it's like all of this agent building is like so context specific, because I really think it has to do with like, if you are looking at your exit planning, like where are the big gaps? Where are your strengths? And like, how do you like fill the gaps? Maybe with agents, maybe that's the right thing. Or do you have gaps because people can't spend the time they need to on something else, but you could automate some of what they're doing towards that. So I think that this is where it's been tricky sometimes in telling stories about like very specific use cases, because it doesn't mean the use case couldn't exist. It just means that that use case might be like very different than someone else's use case. But that's also so much of where the power of this is, right? Because I don't know that we want like that's kind of like the previous era of technology was like segmentation into like generic tech, right? And so like chatbots worked for consumer tech where you needed to ask basic questions or get a password or whatever, but it didn't really like impress people. But what impresses people with agents is when you've tuned the agent really, really well. And so, this isn't directly related to your question, but I think about yesterday, we had a customer that was talking about how they have a lot of Agentforce SDR, like they have a lot of SDRs from us, and it's up-leveled their SDR, like their SDR, it's small, it's a tech company, they only have a couple, right? But their SDRs are still like in the SDR experience, but it's now like their job is to train the agents. And so like the agents are running across like all the leads that come in, and then because now they have them like set to do different things for different lead quality and different lead scoring, et cetera, et cetera. But then like the SDRs are now kind of like checking all of these conversations, and then they're like adding directions to the agent when they see things where they're like, oh no, like, you need to answer that question like in more detail or whatever else, because like the more you train the agent, the more you give it that direction, like the better it gets. But how fast these agents are getting better because they have a human companion that's essentially like, like going through those steps. And then the SDRs really or the agent SDRs prepare the customer to a certain extent and then hand it off to a human. And then the, human kind of like runs with it from there. But I think that is like, that works for their company, but someone else is going to do something different because someone else might decide, and we see this, right? There's other companies that decide, I have, there was an enterprise customer who was an example yesterday that has 150,000 leads a month that come into their website, but they can only handle processing 15,000 leads with their human SDRs. So they're still going to process the 15,000 that have the high lead scoring with the human SDRs, but now they have like 90% of the leads that they previously were just like not really working, that they have agent SDRs that can work. And if it turns out that any of those leads are actually really good leads, they can be transferred into like a human SDR cadence, which is what works best for their business. But I think that's really where people need to think about, like, what is the process that I'm actually trying to optimize? And then like, how do I add agents into that relative to, since we started on talking about kind of leadership capabilities, right? And like various capacities that people have, right? Relative to the human talent that I have, instead of kind of looking at this as more like one size fits all.
Well,
That's
and
a long answer.
what's interesting about describing that process of having agent SDRs and human SDRs, I was talking to a company earlier this week where I asked how many employees they had, and the answer was something like 17. And I said, oh, are they all in Las Vegas, which is where the company was headquartered? And the person then got kind of quiet. And then after a pause said, well, 11 of those are agentic. So they truly treat them as employees. They have names, they have pictures, they have all these things that they've developed, and you can ask questions of those people. They have their specialization, they have whatever else. And as a customer, I would have no idea that I wasn't talking to a person through a huge portion of my journey because
wild.
they're so well specified for this company's needs and are designed to learn from real humans when they're not providing the answers and the details that one would need. And so, and it made the process considerably faster when I was trained to engage with, it was a digital marketing concept that I was going into. And that's a great application for that because it's an opportunity to create things that would have taken humans weeks or months to put together that, given that they have access to so much information, can pull those, customer personas and directions as to where you should head for certain types of pockets when you're going to do focus groups or when you're thinking about writing blog posts that target a specific audience. A lot of these agentic employees could do that much faster than a human could. On the flip side, that doesn't negate the need for people to be involved in all these processes and to be a part of it because the agents are really bad at training themselves right now. I say right now because at some point in the future, there could be an opportunity for that to happen, and I'm sure there will. But that human element is absolutely critical, and I think is going to become a more salient part of how companies that we're all working with prepare for exit is understanding how are you using AI in your tools? How are you creating this to be a leveraging force, not an also ran? And how are you ensuring that it's representing your brand, your company, and your vision in the best possible way?
I like that.
Not to dive in yet again, but just one thing that I did think was super interesting. So we had all these speakers yesterday, from hyper growth companies, like lots of different stages, VCs talking. Everyone agreed that the human still needs to stay in the loop when it comes to sales. Like everyone thought that you could agentify like a lot of steps, but
Right.
like even these AI native companies were saying like, we still like people still want to buy from people, and like we don't see that changing in the immediate future. And I thought that was really interesting because if there was a group that was going to say they thought that that was not going to be the case, like it would have been in this kind of forum. So I do think that's something for us to take heart in. Like humans are not just going anywhere. This is about making humans and productivity better.
Absolutely. Well, we currently don't have any questions in the chat, so we'll leave the last couple minutes. Do you all have any parting thoughts or insights that you'd just like to share in general?
I can just touch on, I think,
On the spot.
No
Go ahead,
worries.
Bill.
I think the one of the closing thoughts I think is especially as we look at exit planning and working with these financial planners and these exit planners and wealth managers is I think what Lindsay and Mara were touching on is that these agents can become can become like leadership coaches or executive coaches or exit planning coaches that are supplements to the financial planner. So after you have your meeting, after you lay it out, you can use these agents to support the decision making, help provide that continual guidance, and then that provides the financial planners the ability to more effectively engage with their clients, support them throughout the entire process, and then just play in that strategic role, but at the same time always step back in and keep making sure everything's learning properly, but you're able to align it and just do so much and just be so much better prepared going into exit, or as you think about exiting, than you would be previously, because now you have this support that I think previously didn't exist because it took too long to gather all the data up, took too long to gather all the KPIs up. There's too much benchmark data, or it's too hard to analyze. Now you have that in real time, and you can make it actionable with kind of real time guidance that's aligned to specifically what you're attempting to do in your family-owned company as you look to exit.
Great. Well, thanks for that parting thought, Will. Appreciate you, panelists, as well as our guests joining us today. We hope this conversation illuminated how AI is changing the game in readiness and due diligence. This roundtable is part of our monthly series from PL3, where we'll explore topics like leadership performance, cultural alignment, investor decision-making in greater depth. Next month's topics will focus on leadership performance, so stay tuned for more details. If you'd like to learn a little more about us, visit us at www.pllab.com. We'll see y'all next time.
Thank you very much.
Thank you.
Thank you, everybody.